Hello, Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, I thought it'd be interesting to look back at the last several days and just see how chaotic and crazy this market has been. And if we look at the Dow, which we're going to look at right now, you can see that we sort of started in a very interesting fashion. First off, this is where we got out saying to be neutral. So there's the weekly right here, saying to be neutral because you have clearly the weekly in conflict to the monthly. The monthly is positive, the weekly is negative, indicating a sideline position. And this is just before. This is when the vote came out in London. This is the next trading day right here. The red, big, sharp down red line would push the market down almost 3.5%. And then the next day we had another further down, and it looked like the world was coming to an end, and all of a sudden, boom, right up. But it's interesting to note that every time we've rallied just a little bit lower. It seems to be losing momentum now. This morning we're supposed to open lower, and I think if we take out the 17.8 level, I think we'll see a lot more pressure coming into this market. I think people are still very, very nervous about being long stocks, and I think for good reason too. But the other thing to look at, in my opinion, is right here. If you see the 50 line, which is right here, broken on the downside, then I think there's a very good chance you'll see another test of these lows. How we close this Friday is going to be very, very important, because that's going to be sort of the comfort level everyone's going to have going home. I would say, obviously, if we close into new high ground, like say up here at 18,100, that's a different ball game. But if we close lower for the week, and I think lower for the week would mean if we close down, let's say below 17.6, 17.5, then I think there'll be a lot more sideways and choppy trading action. So be careful in the indexes. There's no reason to have a strong position. Remember, this is a sidelines market right now, okay, which means it's just a big trading range. From there's the highs, and that was the low, and this is now the low. So again, it's just a very, very broad trading range, which can chop and really decimate your equity pretty quickly if you're trying to catch the swings, which we are not trying to do in this market at the moment. Pretty much the same picture in the S&P 500. Again, watch the 50 line on the RSI. That'll be a good indication that the market's turning right back down again. We're going to be open about 0.5% lower this morning when the market opens, and I think that'll put some early downside pressure on this market. The NASDAQ is a little bit different. That actually is, we have a monthly and a weekly that's negative, not a good sign. So it would say that this market is headed lower. You have the RSI just below the 50 line, indicating this is the weakest index out of the three that we track. So the Dow and the S&P are sidelines. This is definitely a short in our books right now. So let's see how that works out. As you know, we've been bullish on gold. It's been really rewarding us very nicely. We've had a nice move up. Today we've seen gold trade at 1375, and it looks as though it wants to continue up to our target zone. Remember, we talked about this sort of like, it sounds like a broken record, but it really does seem to be the way the market wants to go. And that is, we take this out and we keep drawing this picture, but just to reiterate it one more time, here's the major resistance. We talked at 1300. Remember 1300? We've gone over there. We're $73 over that right now, getting close to our target zone of 1395 to 1400. Now remember, this is not an ultimate target zone. This is just an intermediate target zone where the market might find some support, like right here, and then sort of chop around a little bit before it continues up, because we can see this market going to the 1500, even the 1600 level in the future. But for now, that's our short-term intermediate target. But the trend is your friend, and the trend, as you can see, based on our score of 100, is clearly on the upside. Crude oil is looking a little bit heavy this morning, but we're down to an area where it should find support around 46. If it goes below that level, then it's going to be under a lot more pressure on the downside. If we scope this out just a little bit, you can see it's had a nice move, but it really hasn't had any kind of major correction. If we put our Fibonacci in here, you can see from the highs, scope it down to the recent lows, and you can see 43.36 rather, 45. I would say possibly we can see the market down to 43.36, but very oversold below. But the trend, based on our trade triangles, put that in there, is on the downside. Beware. Hey, I'm Adam Hewison. Thanks for stopping by. Be careful. These are going to be very volatile markets, but it's a short trading week, but we're getting back to more normal trading conditions, and that's a lot more predictable for everybody. Thanks for watching this video, and be sure to leave a question or a comment on our blog. We'd love to hear from you. Take care.